Hello all, thank you for watching this presentation called Getting Set by the FP Markets Inside team. My name is Joseph Kelly. I've worked on the FP Markets sales team since 2012. During my time here, I've been immersed in financial markets in many different ways. Part of my role has been to understand and promote various different execution and charting systems, talking to new traders about avoiding common trading mistakes, looking at things like risk management, position sizing, and then your basic charting strategies and basic trading strategies also. I'm active on Twitter and plugged into a few different trading chat rooms and have traded my own money for the last 2 years, so put a bit of skin in the game myself. Obviously made some mistakes that I'm sure are common to all new traders. Working for a non-advised, execution-only retail broker like FP Markets, I've chatted to traders of all shapes and sizes. So, thinking right through from your first timer stepping out of a demo environment, through to a hobby trader trading around a full-time job, right through to your 365-day-a-year screen trader. So with this content, I'd like to provide some information that's useful to all traders, no matter what your style and no matter what securities you're trading. It was really through chatting to traders themselves about what's worked for them, maybe what hasn't worked so well in the past, and really how they approach their preparation that I found motivation to do this video. Just onto the fun stuff. Firstly, we do have to run through the educational disclaimer. Please take a quick read. The material provided in this video is educational in nature and does not constitute financial advice. Please seek appropriately licensed financial advice before acting on any of the information in this video. Before we dive into the content proper, I'll just give a very brief background on FP Markets and what products and services we offer. This should provide you a bit of insight into my particular perspective on trading, given the broking environment I've come from. FP Markets provides execution on direct market access equity CFDs, index futures, and FX. So these products are characterized by having access to leverage or non-leverage trading depending on your risk profile, being flexible in a trading sense, looking at trading both long and short side, and also a very cheap brokerage environment. Pretty much all the things that make a particular product conducive to trading as opposed to long-term passive investing. From a personal point of view, if I wasn't working for FP Markets and trading full-time, my goal would be to be, I guess, a discretionary short-term trader. Looking at ASX equity CFDs, myself in terms of experience, and trading both long and short. The title of this webinar is Getting Set, and the goal is firstly to provide some structure and resources people can use to help them prepare for the upcoming trading day. And secondly, to help people identify what is crucial information and help them identify catalysts that will lead to trading opportunities. So having a look at the macro view and market fundamentals, my view is, look, even if you're a purely technically orientated trader, you need to, so you tell people you trade the chart, basically. I do believe you need to have a good grasp on the fundamentals. Not talking stock fundamental stuff here, but really economic fundamentals that are pushing the market as a whole. So not just bull, bear market, that sort of basic stuff, but a more nuanced understanding of the fundamentals pushing the market in either direction. This is obviously going to have an impact on every trade you take. So you'll get certain markets which are more conducive to longs, some which are conducive to shorts. You may have a trending market, trending gently, where you're looking for longer hold time on your trade and shorter hold times when the volatility is high. So it's gonna have a backdrop, and it's going to influence all the trading that you do. Just to throw out a few examples there, if you're wondering what I'm talking about, if you look at the last couple of years, we've had quantitative easing, Fed rate hikes, commodity price runs and slumps in Australia is quite a common thing. And more recently, and pretty interestingly, I think the fear and volatility in the lead up to Brexit, and then again, the same again in the US election, a lot of fear there. And surprisingly for most people, we've had the Donald Trump rally once he's been elected. So just really, in a basic sense, from a technical point of view, you want to be familiar with the daily charts of the major indexes. So you're looking at things like SPY, S&P, Dow, Nasdaq, and DAX. So have access to chart these somewhere and hopefully annotate these indexes. So you're basically looking at the daily and weekly big picture and getting to know the charts well. So you're looking at things like familiar chart patterns that appear that might give you an indication of future direction. Basically, just where the major levels are in terms of support and resistance, any interesting spikes and things like that. I guess a good question is, where does this information come from? So where do you find out all this information I'm talking about? And for a full-time trader, most of this comes from a process similar to osmosis. You're at the screen most of the time, if not all the trading session. You're continually placing trades and probably plugged into all the financial news flow you can. But for people that are time poor, or you're just starting out, you don't have sort of all the resources available. Oftentimes, if you're time poor, you'll have to rely on a third party, and that's when some sort of market summary will come into the equation that can be quite useful. So having a look from a market summary, what we want to try to get out of that, besides the big picture view, you'll need to know what happened more recently, as in the previous day's ASX session, and overnight market movements, particularly in the US. It's no secret that most of the world takes its cue from the US. US sets the tone in terms of what's happened in that market, the financial news that's come out, and there's that strong lead in from the US into the ASX. We're the next market to open, obviously, once they close, so we're digesting all that information first. In terms of options for a market summary, lots of brokers provide a market summary. FP is no different. Ours is called the Daily Market Report. You do have some other options, so I'll just take you through those briefly. So this is the Daily Market Report. It's a free service to clients and non-clients alike. You subscribe with an email address, and you'll get a daily report that looks like this, with a sort of an opening blurb, a link through to the report, and then links to various trading resources or educational resources, and then some sort of trade idea or interesting chart at the bottom. So let's have a look at sort of what you get from that report in a typical scenario. So what you really want to do is be able to view overnight market indexes. These are the ones we were talking about charting just a moment ago. Then coming down and looking at talking points for the Australian market. When this one was done, we were in the middle of the earnings season, so we've got important financial or economic information coming out, stocks that are reporting on the day. You've got some brief scans there, 60-day high and lows, looking for momentum breakouts above of these stocks. So interesting with a stock that wasn't on the list yesterday that's just popped up onto one of these scans. And then you've just got a few brief summaries, so US market commodities, some iron ore prices and oil futures, and then a summary of the FX majors in European markets. So this is just really a time-saving device that if you've missed the action, you can come in and get a quick summary. Let's have a look at another one. I mean, there are other market summaries out there, like I mentioned. FP's one is great, but it's not the only one out there. For myself, I like to subscribe to the Finance News Network's email, which provides a morning report in the form of some short video files. It also brings out a 12 noon report, so I think this is the 12 noon version. So we're not affiliated with them in any way, but I find it a useful service, and there's hundreds of other similar services out there, but it's good to get a mix. The next option is to move into something a bit more robust that has some more in-depth analysis. It's a little bit more than a summary report. Instead of summarizing this, other reports will delve in a little bit deeper and provide a little bit more analysis, and these can often be good if you've got the time. So we've been looking at free services, but there are paid subscription services out there. This one's called the Coppo report. So it's produced after market close every day, and it's quite a lengthy report. So I'll go down through some of the pages in a second. But it really, it's very in-depth, produced by a very, very respected institutional analyst. Been in the game a long time doing this sort of report, and has everything you could possibly need from a summary perspective. So if I just scroll down to give you a brief look, starts with an ASX summary and some talking points from the session. Has a lot of interesting single stock commentary, so looking at Woolworths here, and then commentary on Telstra for the day, so that's quite interesting to read through. and then goes through lots of charts. Basically a lot of institutional information in the second part of the report that you might not have access to as a retail trader. But look, it's 25 pages long, for example, so you're probably not going to read it through it every day, but there are lots of interesting points in there if you do have time to take a quick look. So moving on, we've looked at market summaries, and I really want to emphasize. Moving on from market summaries, I want to emphasize this idea quite heavily that if you don't want to rely on a third party, and you really want to sharpen your own analytical skills, that's a great idea. So go and search the raw data for yourself. Find a place where you can go and find out where US markets finished, a data source for where stocks and sectors traded, and then use your own analytical experience and skill to find different catalysts for trades in your market. So that's really the crux of it all, to be able to use data, find a catalyst, then action that catalyst and trade successfully. We've done a really interesting and comprehensive webinar on the site called FinViz. This is one we'll go through in a moment. The website, so www.finviz.com. It was a 45-minute webinar on the site itself, particularly the scanning function. So we won't go through it all now, but what does FinViz do essentially? It really gives you free access to end-of-day data for the entire US market, futures and commodities. It does have a great custom scanning feature, as I mentioned, but I guess what it's more useful for is sharpening your skills to identify those catalysts. So let's have a look at a list of catalysts I've put down here. The first thing, and one thing that it's really easy to look for, is US ETF performance. So an exchange-traded fund is one security that has exposure to a particular subset of securities. Through that one security, you've got diversified exposure into a particular market, whatever it is. It could be, the US energy ETF or Australasian gold ETF. So you can use this ETF performance as a proxy for similar sector performance. So let's have a look. If you come into FinViz and you notice that the Australasian gold miners ETF is up 6%, that should ring an alarm bell as a possible catalyst for you to look at gold stocks in the next session in the Aussie market to see if there's that US lead in. Also, I'm not pretending to be an ETF expert, but just due to the way ETFs are set up, let's say there's a price increase of 6%, the ETF will often have to provide, will often have to buy more of the underlying constituent securities to provide more ETF units. I mean, they have to maintain a certain amount of liquidity in their own ETF, and that can in turn inject liquidity into the related or the underlying stocks. And the point being that liquidity will hopefully provide a trading opportunity. So if there's buying or selling, you can follow that and notice it and trade off the back of it. So moving on, you should also be looking at general sector performance. Just getting a read through into our market to see if there's any obvious patterns or themes there. Yeah, I mean, you can get broad-based rallies where everything's up for the day. You get a broad-based sell-off where there's a lot of fear in the market and things are getting sold off no matter what sector you're in. But I guess what is also interesting is if you get a star-performing sector, then you can look at investigating the reasons as to what's causing that outperformance or underperformance even, and then look for the follow-through into the Aussie market. Another one that's interesting is big movers and gainers in individual stocks. So if you get a big bank or a resource company that's sold off significantly, you might have a tech play there as well. I guess with these big names, these blue chip leaders in the sector, it's more about sentiment for the sector in general. So let's have a look at an example. Let's look at, say, you get Tesla getting sold off sharply in the US, the US battery car producer. Then you might be looking at lithium plays in the ASX, or why is Tesla up or down so much, and then have a look at some related complementary stocks in the Aussie market. The next thing is futures prices on the site. It's got a very good futures price scanning tool. So if you're looking at trading an Aussie stock that's commodity driven or has a associated futures product, you might want to look at those futures prices and then also possibly summarize FX majors as well. Look for anything with particular, international currency exposure as well. We won't have time to go through all the different aspects of the site, but I highly recommend watching the the tutorial video on the website. Get to know the site, see if you find it useful, and if all the information you need is there, and if not, find an alternate. But still, that the theme would be the same to find the information yourself, and then hone those analytical skills. So this is a screen grab of the market map section of the website. So you can see that this is broken up into different sectors. You've got the larger tiles, bigger market cap companies here with Google, Facebook, then down here with Apple. It's also split into different sectors. So we've got healthcare, minerals, technology, etc. So you can get a quick visual representation of how and where the market was performing or underperforming, and that's often a very easy way to see patterns as well. This is the sector scanning page I was talking about, looking at different sector performance. This can be done over different time frames as well, which is quite important. So you can do your daily, weekly, monthly, and quarterly performance there as well. One example of how you might use this for a trading opportunity is just simply use this to look for longs in the markets that are showing significant positive shorter term performance. Possibly look for shorts in negatively performing sectors. This is the future summary table. This is on 1 day relative performance, but again you can do the other time frames if you like. For moves that stand out stronger, I guess for me I'm thinking about it in the way there must be something going on in the background causing that move that's either structural or possibly seasonal. And that can often be worthwhile investigating. So, in this example, it's lean hogs, ethanol or sugar, but there could be other more useful examples that'll pop up from time to time. So at this point, we've looked at the market summary. We know what's happening in overnight markets, and we've checked some raw data. One other thing so another useful resource will be looking at stock-specific, looking at stock-specific news and financial news websites. So for the Aussie market, you probably can't go past the Australian Financial Review or maybe Sydney Morning Herald Business. We can also look at things like Forex Factory, which is a great tool for price-sensitive macro data. I mean, it says Forex Factory, but it's used by traders of all shapes and sizes for sure. It's more just an economic data website. You'll find things there like interest rate decisions, central bank commentary, GDP numbers or production numbers. So definitely market sensitive news for sure. And then again, if you want something more US focused, you can have a look at Bloomberg.com for US based finance news. And keeping in the theme of offering people a free choice, a free retail service or a paid subscription, maybe have a look at something like TradeTheNews.com, which is a sort of a more professional service. So let's just have a look at the websites briefly. So looking at forexfactory.com, there's a lot of useful features on the website. There's a discussion forum. Up the top there, a broker comparison page even. With these FX pairs there, you can bring up a chart of most of the majors and a few of the crosses. But really, what's most useful is the economic calendar. So that's what most people are using the website for in the middle here. On any given day, you can see what news is coming out, the relative impact of that news, which is obviously color-coded here in the middle section. So red having a larger effect on the underlying market, and then yellow less so. And it shows the underlying market and currency should have the largest impact on. So on this website at the moment, we've got services PMI out at 4:30 a.m., impacting the pound obviously. So a website's quite key. A website like this is quite key because you can't miss this type of fundamental economic data. Similarly with that macro theme I was talking about before, you do want to have that fundamental overlay, and this is sort of a very acute version of that with new economic data hitting the market, especially if it's flagged red. The market's going to be reacting to that, and you're not going to have an idea of what's going on there. And I've also just got the Bloomberg side up here, and then, like I was talking about before, the financial review as well. So let's also, so we've looked at summary pages, websites, retail websites. Let's move on to the tools given to you by your execution provider. So everyone has an execution provider that they're placing their trades through. FP Markets uses and executes through the Iris suite of platforms. Iris are really the industry leader or industry standard in terms of DMA and genuine exchange data platforms for the Aussie market. So they supply most small to mid-sized brokers. Major financial institutions will use Iris platforms such as Comtech, E-Trade, Westpac. So for that reason, you'll use it in various different situations. It's a key platform to understand and to realise what important data it will give you access to and how you can use that data to your advantage. So we don't realise how lucky we are, I guess, in this age of instant information and access to trading systems, because you hear these stories of 20 years ago in the broking industry. The client calls up their broker, he or she's just sitting in front of the same Iris screen that we're about to look into, regurgitating all that information back to the retail client. Now a trader has access to almost all the financial information the typical broker does. Is probably better trained at using it if they're relying on it for their income. So yeah, it is useful to have these platforms if you know how to use them. So let's take a quick look into Iris. So this information is a little bit more compressed than I like it to be. I'm doing this on a presentation laptop, so the windows are a little bit smaller, but obviously the bigger screen, the better. So I mean, Iris is an execution system that will allow you to view and manage a portfolio in the top left-hand corner here. You can execute trade tickets, monitor your orders, and amend and delete orders in this order pad. It has its own charting suite and charting facility, so if you're looking for from 1 minute ticks to daily or weekly charts, that's all there. But more crucially, it gives you access to live market data and pricing. So the market data for the security is what you're basing these trading decisions off. So it's crucial that this is live. It's presented in an easy to read format. So let's just change a ticker over here to Telstra. So there's two ways to look at pricing in an execution platform. You can do stock-specific pricing, like we're doing here in the market depth. I can look at every buyer, every seller, at every price for Telstra in the exchange's order book, with the course of sales or the last 20 trades running along the side there. So one question you might be thinking with all these numbers is, how is this useful? I've got a last traded price, I've got the buy and sell, and then I've got this market depth of information along the bottom. Well, one thing it's doing is giving you a sense of demand and supply for the asset. So you can look at some people looking at changes in buyers and sellers as people react to new information. Particularly large volumes at certain prices, is the number version of chart support and resistance. I mean, there's a whole style of trading that just relies on analysing the bids and offers, or what we call market depth of a stock. So the platform, if the market wasn't open at the morning, wasn't open at the moment, the platform will give you indicative opening prices for pre-market and closing auctions. And these opening prices are very important in terms of possible trading opportunities for your short-term trader, or at least timing the entry into a trade well. So if you're not interested in every buyer or seller, and more so just looking at the last traded price and the session performance of a stock, this is where you might look at something like the quote window on the Iris platform. So I'll just bring that up now. So if you're prepared to do a sufficient amount of work, you can have all sorts of lists and subsets that you're breaking the market down into that are useful to scan through. So I've got a bunch of user watch lists on the left hand side here. The one example is my traded recently watch list. So this is any stock I've traded in, or looked at trading in the last 30 days. So for myself, it's just, often I like to trade the same stock, just because you feel like you know the chart. So these lists can be set up in many different ways. Theoretically, you might have small cap, mid cap, large cap. A list for every different sector in the market. Your banks, your iron ore players, your goldies, and etc. etc. So it's not only for intraday scanning of stock movement. So what I'm doing now, intraday scanning, sorting by whatever column heading. So percentage up, percentage down, value up. Sorting by news report even. So that's all. More of the intraday scanning feature, but also works well for pre-market. So if you come into the market late, or you're looking at the market after close, your sector watch list will tell you what areas are out or underperforming, and you can use this to look at trades for the next session. So for the ASX 200, sorting percentage up and percentage down. Then look at the reason why the stocks are at each end of the list and whether this is a trading opportunity. So because it's been the most volatile stock in this section, is that worth a look into the next section? So one thing that a lot of traders will do is take a screenshot of the XJ or the All Ords, which is a sort of a broader market index. After the market's closed, sorted in this particular way, percentage up or percentage down, you're going to get a look at the most volatile stocks in that session. You save that as a screenshot on your desktop and use that the following morning to see if this volatility is going to continue, and then again decide whether it's tradable. So as a short-term trader, you'll often be hunting for the volatility. You don't want to be trading stocks that aren't moving. You don't want to get into a position in a stock that's going sideways all day. Potentially you might want to hold that overnight because maybe even of brokerage costs or the spread on the stock, and then again you're exposing yourself to overnight risk. You want to trade stocks that move, as a short-term trader in particular, and my preference is to do that. And so one way to find that is to look at stocks that were volatile in the previous session. The next day, as you're going through the recently volatile stocks, find out what the catalyst for that was. So look into the reason why. Don't go into it blindly. Look at, was it news-based? Was it because there was some sort of commodity price move, as an example? Then what are you looking for in the morning? Check if that stock's matching up or down in the pre-market auction. Check if there's increased volatility, increased volume in early trade as a marker. There may, if a stock's been volatile the previous session, there might be some analyst commentary coming out, an analyst note about the previous session. There might be a retail news story in the AFR that will provide further follow-on that a lot of retail traders are reacting to, and that can often push the move into 1 or 2 or 3 days. So volatility is often, not a one day phenomenon, but can go on a few days until it sort of peters out and loses steam. Just quickly, if you can't find this information, there's also another way to sort of cheat and do this through the Coppo website. So this is Coppo, which is an online, mostly sort of a forum website, discussion forum and chat. So in a very restricted format, you can still find biggest gainers and losers from the previous session on the left-hand side there. But unfortunately, Coppo often has smaller price value stocks that have had a big percentage return, and with the IRIS system, we can filter by value or points movement return. So we can filter away from stocks at the smaller end of the market if that's what you want to do. So another key feature of IRIS is the news feed. Why is this so key? News is often the most important and easiest to trade catalyst for a short-term trader. You can get news in all different forms. So whether it's an update on trading conditions, profit or sales targets forecast, upgrade or downgrade, it doesn't matter. You can even look at the twice yearly reporting season for stocks. That's often a great time to trade when there's catalysts on many different stocks every day. But look, whatever the news is, whatever the news-based play is, it's just important that you notice it early. You don't miss the news, miss the trading opportunity, and also learn how to trade that particular news. The trade management for that style of news story is often repeatable. So, with practice makes perfect, and it'll often get easier as you go along. So with IRIS, like I said, it's got a news function that shows anything the company is obligated to release to the ASX. It can be found through the news function. There are more paid professional news services that will provide some additional data, like institutional analyst ratings changes and commentary, etc. In this way, let's just have a look at the report section on a particular stock. So you can search the entire market, or you can do something stock specific. Often if I sort by percentage up or percentage down, we've got the reject shop here down 33%. That's a dead giveaway. You look at the news report, anything that's obligated to release will be here, so you can click on it here, run it as a PDF, save it onto the hard drive of your computer and things like that. I mean, for shorter term trading, you might not have time to read the whole news story, obviously, or if you've got a lot to do or if you've got a lot to do in terms of preparation or not a lot of time. But just be ready, read the headline and the first page, and then I guess what's more important is to notice how the market's reacting to the report. So this might be reflected in changes in the market depth, in the bid and offer volumes. So if there's any particular pattern there, you want to notice that. A trade on the ASX is the result of two people's buying and selling decisions. So as soon as news comes out, the stock's getting heavily bid. At least in the shorter term scenario, you can assume that the market sees that as positive until the market depth tells you otherwise. So whatever execution system you're using, it is important to know it well, be able to access all the useful information you need, and just to reiterate, the more work you do on your watch list setup, the more you'll get out of them. So you want to be able to catch the volatility as early as possible from the previous day's trading session. Pay attention to all news feeds. There will be a reaction to any significant news hitting the market. So this is just a screenshot of the previous day's winners and losers saved as a picture on the desktop. This is the same thing with the losers from XJO 200. This is a match pricing screenshot. It's particularly important. This is the All Ordinaries Index sorted by match percentage. So the match percentage is the indicative opening price as a percentage from the previous close. So when the market isn't open, the exchange is accepting orders from 7 AM. To be able to sort by this match percentage figure is very useful. So let's look at a scenario. If you've got a stock trading at $1 even, it's looking like opening at $1.05. IRIS will sort this stock and show you that it's matching 5% up. The same if it was opening at 95 cents, then it'd be 5% down. So even if you've got no time at all to do any preparation, you don't know anything that happened about yesterday's trading session, this system will sort any stock that is moving for you in the morning, and you can just follow the buying and selling decisions of other traders and make sure you're trading things that are volatile and that hopefully present some sort of trading opportunity. So let's take a look at another really great resource I believe every short-term trader should be looking at least any trader that's using the screen to place their trades. So, not looking at the chart, then ringing up your broker to place the order. So people that want to finesse and time their entry a little bit more closely and are looking at things like demand and supply at the time you place the trade, this system will be very useful. So Spark is an advanced depth analysis and livestock screening tool. So let's just take a look at some of its main functions. Again, we've done a very in-depth series of tutorials that are hosted on the website. I think there's 3 or 4 part series on the website, so I'd encourage you to take a look at those in the videos. And we won't have time to go through the whole system at the moment, but we'll get a look at some of the key features. So it has basic watch list functionality. All the fields are updated dynamically. So let's take a look at this one, just interesting stocks that I'm following. You just grab the stock that you're interested, put it in the watch list, and then these column headings are updated for you. So bid, offer, last traded price, etc. What's more interesting is something like a smart list here. So if I have a look at my smart list, trading at highs, rises, fallers, these ones here. So a smart list is like a watch list but has more filtering criteria. So we can look at filtering this list. I'll just make it a little bit bigger here. So you can filter by things like market cap of the stock, average daily turnover, whether it's above or below VWAP, the particular price level you want to look at. And these filters allow the list to become much more specialized. So in this list in particular, I'm looking at stocks sorted by percentage change, from 9.5 cents to 50 cents with a turnover of 30K per day, at least with a market cap of at least 20 mil, that are trading at their highs. So that's a very unique way to sort the market data that you want, and because it's dynamic, as soon as any stock meets that particular criteria, it'll jump onto this watch list and I'll know that I'm looking at it for this particular set of reasons. Another unique criteria that you can sort by in this system is delta. So delta is percentage change over custom timeframes. So this means that I can see stocks that are trading at highs, trading at lows, or within a range but showing increased volatility or increased price movement. So that, for example, 5-minute rises here and 5-minute falls here. So these things are more for your intra-session scanning rather than pre-market. So you've done a bit of analysis, you may have traded the open, and then you're looking at one chart or maybe one market depth, and then these lists will bring price action and trading opportunities to your attention that otherwise you may have missed. So with these filtering options, it's like designing many different eyes to watch the market for you, and then when something pops onto that list, it's letting you know that something important's happened. So if you get something at 12 noon that jumps onto the 5-minute rises list that wasn't there before, well, you really need, you should be basically taking a look at that, checking if it's significant. Sometimes if you haven't caught the move early enough to trade, you can wait till the move's exhausted. There's a million different ways to play it. You can look for a counter trade after the move's finished. Once one stock's moved, you can look at other stocks that may move in unison. So, if you're getting an A to M move, then you can move over to Bellamy's or Blackmore's, for example. And now let's have a look at the market depth as well. But really, apart from the smart list, I guess the key feature of the Spark platform is the unique way it looks at market depth. So as we can see here, it's changed the market depth for stocks into easy to see histogram columns with the usual market depth or market table underneath. The problem with the Iris version or just a standard version of a market depth with numbers is that these are changing rapidly. It's very hard to assess the movements and notice any pattern in that change. Basically, the numbers are just running past and you're trying to figure out what's happened. And the human mind finds patterns in simple pictures much more easily. So in a stock like this, or maybe let's try something else. So in this stock here, not only do large bids and offers stand out, like this one here in the middle of the market depth, a lot of bidders at 61.5, or this particular large wall of resistance up at 80. You know, that's a graphic example of support and resistance that stands out very easily. And also, importantly, you can timestamp to your preference. So if I want to see all the bidders in the last 5 minutes, you know, 15 minutes, all orders that are less than 30 minutes old. So what that gives you the ability to do is see the market react to recent news. So if some news comes out and I've got my timestamp on 5-minute news, then I'll be able to see which is reacting and which is older. So in one sense, you're trying to separate smart money from dumb money, or, you know, new orders from stale orders is another way to look at it. Also, it's worthwhile going through the depth replay function down the bottom here. So I can replay the depth from any point in time, and maybe just slow it up a little bit here. So for a given stock, you can go back days and days, and replay the action in that stock at whatever speed. So you may want to replay the action in a particularly successful trade, so you can reinforce good habits of that particular trade setup. Or if you've got a stock that you traded poorly, you know, you can try and go back and understand what's happened in that trade. Were there some early indicators that you could have noticed that you could use in the future to cut that losing trade a little bit earlier? Another thing you might use this for is you're looking at a daily chart, you found an interesting candle, and you want to find out what was happening in the bids and offers to produce that candle. So what were the buyers and sellers doing at the time, and what did that behavior look like? The reason being, if you can get a sense of what kind of action produces that candle, you can spot this in the future and anticipate it and then take advantage. So FB Markets isn't affiliated with Spark in any formal way, but we we don't provide it as part of our usual offering. But we can organise demos and live accounts for people who want to build these type of skills. I mean, it's just an execution tool. Sorry, it's not an execution tool. It does depth analysis, charting, scanning. So you will still need to find another system to place your trades, manage your portfolio, take care of all the exchange-related stuff. So one topic that comes up a lot, speaking to new clients especially, is the rise of social media and how that works in with trading. So looking at things like Facebook, Twitter, and other instant messaging services. My view is yes, you can use these services. However, you need to be aware of unscrupulous behaviour of the people posting the information. So everyone posts in self-interest. This is normal, to be expected. Often people are ramping up their own stocks or talking up their own book, which is quite common. And as long as you take everything with a grain of salt and apply your own analysis to everything you see, you should be fine. So just go in with your eyes open and then use it for what it is. In my own experience, I've found Twitter to be a much more useful tool than Facebook. It seems like there's quite a vibrant online community of traders on there. You'll get a mix of TA and fundamental analysis. And also a lot of brokers have a strong online presence on the Twitter sphere. I'm not an extensive user of it, but it does seem like it lends itself to the smaller end of the market in terms of price, market cap. Maybe is this possibly because these are stocks that are more driven by news, and enthusiastic stories rather than yearly reports. I'm not sure, but you do see a lot of sub 10 cent stocks out there, or sub 10 cent stock traders, which is fine. But the bias to the end is noticeable for myself. Okay, let's move on. So looking at scanning for trades, I mean, this is quite a broad topic. You could do a 2-hour webinar on just this aspect of trading and get in depth into all the different options available, but it's not something I do a lot of, so I won't delve into it too deeply here. One thing to keep in mind is to figure out what type of trader you are. This is going to guide the type of scans that you're looking for and guide the type of scan that's going to suit your trading style. So asking questions like, what opportunities are you looking for? What time frames do you want to trade in? Do you want to trade penny stocks or large cap stocks? Does the stock need to have a certain amount of liquidity for you to enter? Some people are looking for trending stocks with sort of simple patterns that aren't too volatile, and then other people are looking specifically for price breakouts. So answering these sort of questions will help you decide what type of scans you need. Definitely some of the common things you might base scans off would be things like a volatility scan, which is just looking for things that move. This will be connected to a volume scan, so common knowledge that any price move is more significant if backed up by big volumes. So the volume and the volatility go together. You might be looking at a breakout above significant levels. So if there's a tight trading range or a very long duration trading range, a stock's been trading between two numbers for the entire year, or something that's breaking out above new highs and new lows is significant also. Some scans you can do can be based on technical indicators. You can get a moving average crossover scan, maybe an RSI at level X with a Bollinger Band at level Y. But it really depends on the sophistication of the software you have. So often these criteria and indicators can be completely customized as well. You will get some systems that can scan through a certain list and recognize patterns. So your typical chart patterns, things like your head and shoulders, ascending and descending triangles, and wedge patterns. But for an in-depth look at scanning options, we have done another webinar on the website that you can take a look at, particularly on US markets, but applicable to all markets. And it was using the FinViz website that we went through earlier. So out of that, some simple examples were filtering stocks by price, then liquidity, looking at stocks trading at 30, 60 and your 52-week high. Then also look at stocks crossing over simple moving averages like your 50 and your 200-day moving average. And lastly, just looking for large volume and price increases and decreases. So they're very basic examples, but useful to know nonetheless. I want to look at ways to structure your preparation. So as a way to hone your analytical skills, get into a routine so that what at first seems confusing becomes automatic with time. And you really want to review what you're doing as time goes on and continue to tweak that and hopefully improve the process. Obviously, everyone's going to approach this a little bit differently. So you might have a very structured day where you're getting up every day at 8 a.m, market closes at 10, so you divide that 2 hours very evenly. And then some days are very unstructured. You get in late and you need to know, what's the most important information in that limited time. So I've put a suggested structure down here, and what I'd like to promote is that you do this in some form, revise it, and then just see what works. So with continued use of structured preparation, you get better and better at it until it becomes second nature, and you don't refer to any list, you just know exactly what information you need to find. You do it in the shortest possible space of time, and ultimately just get as prepared as you can for the trading day. So we've gone through most of this already, but just to summarize for people, I thought I'd put a suggested structure down here. So we start with, again, what happened yesterday, possibly looking at the FP Markets report, or do we use the FP Markets, the daily report, or do we look at the Coppo report? Then we're checking financial news on the websites and the AFR or Bloomberg. Step 3 is something we've gone through, which is something I haven't gone through, which is quite important, and that's looking at iron ore and coal futures prices. So here's 2 links for that. These are actively traded futures contracts on a Chinese exchange. The language is in Mandarin, I'll admit, which isn't the best, but once you decipher what the symbols mean, it is very useful to have a live tracking price for those 2 commodities. Then check FinViz, do your sector analysis, check base metals prices, and see if anything else stands out there. You can look at IRIS for biggest movers from the previous day. and where the market is telling you there's new info, there's stocks matching up and down. Then look at Spark for watch lists and possible news feeds from the Spark system. Check Forex Factory for important economic news. And lastly, run your scans and then go out and trade. So that's just a suggested structure you could use. So thanks everyone for attending. That's all for today. Any questions, please email myself at j.kelly@fpmarkets.com.au or use our public inbox, which is sales@fpmarkets.com.au. Our 24-hour line is 1300 376 2233. Thanks all for coming. I hope some of the information you've seen tonight is useful. Hope to see you next time.